Okay, onto your markets now. Asian markets ended the session in positive territory. This despite concerns around the introduction of higher trade tariffs among the US's key trading partners. It's believed that fiscal stimulus announcements from Chinese authorities may have something to do with the improved sentiment there. Interestingly, while other nations are looking to turn up their spending on defense, one of the items the Chinese authorities indicated that they'd be cutting on is defense spending to the tune of about 7%. The Nikkei share average rose by 0.23%. The Hang Seng Index closed up 2.84%, while the Shanghai Composite Index ended the session 0.53% in the black. Global markets were on a general downer yesterday, with US markets continuing their downward trend following the kicking into effect of fresh higher import tariffs on Mexican and Canadian as well as Chinese goods, with all three nations also announcing plans to retaliate. As market players sold out of equities, they turned to so-called safe haven assets like gold. The Dow Jones Industrial Average declined by 1.55%. The S&P 500 fell by 1.22%, while the Nasdaq Composite Index ended 0.35% in the red. Well, looking here at local indicators, we see that the all-share index is trading in positive territory. It's up nicely by 1.5% at 88,048 index points. The local currency, the rand, is trading at 18.40 against the US dollar, 19.69 vis-a-vis the euro, and 23.61 against the British pound. In terms of the commodities, we see that gold is trading at $2,914 an ounce, platinum at $966 an ounce, while Brent crude oil is trading at $70.35 a barrel. Well, to unpack the markets for us, I'm joined by Roy Mutooni. He's a portfolio manager at Sanlam Investments. Thank you very much for joining us, Roy. So the trade tariffs issue continues to overshadow pretty much everything, but we are seeing mixed activity with Asia and our local bourse registering gains today. Why are we seeing Asian markets today higher despite the tariff implications for that region, since many of them are exporters there?
Hi, Nompu. Thanks for having me. So I think there's two ways to look at this. The first thing is you have a weaker dollar, so it means cash is leaving the U.S. and it's finding a home elsewhere. Where better else to find than Asia, because of what we've heard coming out of the Chinese government. So it's nothing spectacular, nothing absolutely new, but they've doubled down on their commitment to try and increase demand for their products domestically. They're going to run a much bigger government deficit, budget deficit. They're going to try and get to the bottom of this property thing, and they're going to try and build demand, try to get people to buy stuff. So I think that's what the market is anticipating, believing that trade among Asian partners will continue, and that spending should be more than sufficient to provide returns to them.
Yeah, just to interrogate the contradiction that they're looking to cut on defense spending to the tune of 7%, while others like the European Union, they're looking to increase their spending in that arena, and yet there are always rumors about China being on guard or ready to invade Taiwan and so on. It's very interesting.
If you think about it, China's biggest problem right now is deflation. They've thrown everything at it. They've tried to generate demand through investment. They've tried to grow their manufacturing. They've tried to export their way out of the problem, and it hasn't happened. All that has happened is their gross indebtedness has risen dramatically, and I mean that budget deficit will get to 8-9%. That's extreme, even for a bigger power as them. And there is the limitation on resources. So I think it's simply a matter of allocation. They're not known as an aggressor, apart from a couple of very clearly known geopolitical pain points. And I think what they've realized is that in the short to medium term, they have to solve this. They can't let it go on its own. So that's why rather reprioritize internally, think about solving the internal problems before thinking about external issues.
Yeah. So here at home, we got the RMBB, our Business Confidence Index report for the first quarter of 2025. It remained unchanged at 45 index points, and that follows 3 consecutive quarters of increases. What's your reading into this gauge remaining steady?
So 3 consecutive quarters of increased confidence just reflects the excitement around the government of national unity, the two-pot, the anticipation of lower interest rates and everything. And then you come to this first quarter of 2025, where we've had all of these tariffs, the big tiff between South Africa and the US, and a lot of uncertainty, and also clarity around the fact that most likely we don't get all the interest rate cuts that we want. And on top of that, the whole budget debacle as well. So I think confidence has basically stalled until people see a new source of hope or a new driver of sentiment, and that's what I think the market domestically is really struggling with.
Yeah. You touched on my next point. I saw a report earlier today. We've been told formally by National Treasury that the budget will be tabled on the 12th of March, which is basically next Wednesday. But we see that in an article today, it doesn't look as though all is well among the GNU partners. They're still not in agreement on fundamental issues around the budget, and yet the party has been organized. What are your thoughts about this? And how does this now translate into, you know, our indices like the Rand and so on and so forth in terms of confidence?
I think the first place to start is that the budget is incredibly important. It determines the short-term allocation of government resources following the medium-term framework that was put together last year. That's the first thing. And remember, the speech is not the end of the day, is not the end of the game. It's only the beginning. Parliament still has to debate it. Things can come in and can go out. So we're very much at the beginning of the process. That said, I think this is a big test. This is probably your first test for this government of national unity. There's no escaping, there's no kicking the can down the line beyond what they've done now. They actually have to come up with a solution. And I think the form and format of that solution is what's going to tell us how good the ability to discuss and compromise is going to be. This is big. They have to come up with an answer. And I don't think either markets or voters are going to look kindly on another postponement or some form of kicking the can down the line. So you're right, the party is all set up. We all want to see something come through. I don't think anyone wants to see increases in taxes, but everyone also wants a stable government and for all of these priorities to be embarked on and to be spent on and to be covered. So yes. Yeah, I think it's wait and see.
Indeed. Let's look at one particular stock, Woolworths. They came out with their half-year results, reporting turnover and concession sales up 5.7% at just over 40 billion rand. Headline earnings per share fell by nearly 20%, with the decision to cut the interim dividend to shareholders by 27%. What's your reading of this stock?
So this one's in the middle of quite a significant restructuring that's been going on for some time between its clothing, which doesn't seem to be fashionable enough, and which used to be bailed out a lot by food. In this result, you actually saw that food, despite growing turnover, actually experienced higher expenses, again, because of all of this restructuring and promotions and everything. So it just seems to be a business that can't quite get going. I think the management team, which I wouldn't call particularly new right now, is trying as much as it can to turn around the fashion business. But what we're seeing is that it's gaining competition even on the food side. Previously, food was what carried it, but now there's challenges there as well. So it's difficult times. The market expected a poor result. They didn't expect it to be this poor, and I think that's why the share has sold off. But yes, so that's the disappointing aspect of this result.
Very quickly, is it a buy, sell, or hold?
I think you have to stay on the sidelines and watch this. It's a restructuring process. There's a lot of risks there. The management team was very competent at the time of being appointed, but they have to start putting some wins on the board, particularly in Australia or something to do with fashion in South Africa.
All right. Thank you so much, Roy, for your time and insights. As always, Roy Mutooni, he's a portfolio manager at Sanlam Investments. We're going to take a quick break.